The reality of the situation is government's too big, we look stupid, there are serious wounds and cracks at home. BRICS is taking advantage of how weak the United States has become, how indebted the United States has become, and they have started to remonetize neutral reserve assets in our face. That's just the reality of the situation. Get yourself some Bitcoin. It's the best expression of currency debasement. It's the best expression of the future of the world we all want to be a part of. It's the best expression of the US monetizing its debt. It's the exit door, guys. It's the exit door. The building is on fire. But here's the thing, the door is only so big, right? Building's on fire, but we all can't exit the door at the same time. What do I mean by that? My buddies who don't listen to me on this stuff, they're gonna exit the door, but they might have to exit the door with Bitcoin at $500,000 per coin. The door isn't big enough for all of us at the same Bitcoin price. Get out while you can. Find the exit door. Find the life raft. It's only at 111,000 now. Get out.
Maller starts with something he calls bond math. It's simple but crucial. When yields rise, bond prices fall. Why? Because investors don't want to hold bonds that pay little to nothing when inflation is eroding their value. If a bond pays 0% or 1%, it's unattractive. But as yields rise, 2%, 3%, 4%, they become slightly more appealing. The rise in yields is basically the market screaming, "These bonds are junk. We need higher compensation to hold them."
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Of the bond market, trouble. Trouble. Long end rising. And so what you guys need to understand here is bond math. I've explained bond math on this show before. I'm going to explain it one more time. Bond math is when the yields rise, that means the bond price is falling. Think about it logically. People are saying these bonds are pieces of crap. I don't want to hold these things. So how does the market get new demand? Get people to buy them. The yields go up. Do you want a bond that pays you zero? Unless you're an idiot, probably not. Yeah, unless you're the penchant of Chicago firefighters and Chicago education and Chicago police force, then probably not, right? Well, okay, fair enough. Do you want the bond with a 1% coupon, 2% coupon, 3% coupon, 4% coupon? So as bond prices fall, yields rise. And so what we're looking at as yields rising, not just in the US, but all the United States allies, United Kingdom, Germany, Japan. So that means bonds are doing poorly. Yields keep going up and still nobody wants to own these pieces of shit. Nobody wants to own them. And this tweet from Mark Moss, shout out Mark Moss, couldn't agree more. He's quote tweeting a tweet that says the collapse of the G7 bond markets, despite aggressive global central bank rate cuts, yields are surging. So that's the thing. As we cut rates, and the US hasn't started cutting rates, we know that, but other markets and other central banks have started cutting rates, and their bond markets keep rising because with rate cuts, there's going to be inflation expectations in the future. So when you drop the price of money, then money's going to be abundant. That means the prices of things like your eggs, like your house, like your travel is going to rise. We call that inflation. People need to be compensated more in fixed income if there are inflation expectations. So G7 bond markets are falling apart despite the fact that central banks are now saying they will start cutting, including the United States. And Mark writes, the central banks are losing control of the long end of the curve. Looks like yield curve control coming to a bond market near you soon. Going long Bitcoin is such an obvious move. I vote orange as in Bitcoin. Bitcoin does not stink. It's the best performing asset in human history. It's the best invention of our lifetimes. So I'm not a political guy. One thing this tells me, government's gotten way too big. It's so bureaucratic. They can't get anything done, even if they wanted to. The other thing that's relevant to macroeconomics and to Bitcoin and to running it hot and to printing money, all the things that you guys care about here on this show, this is severely wounding to the United States. We've heard time and time again since Trump got elected, this guy's a master negotiator, this guy's a businessman. And hold on, don't get all in my comments like, you should be thanking Trump. Don't talk shit about Trump. Listen, I do thank Trump. This administration is hands down better than last administration, in my opinion, as an entrepreneur in the United States working on Bitcoin. Just a fact. Sue me. But I'm also not going to get on my hands and knees and bow down to Trump. I call it like it is. My dad told me the difference between a man and a great man is the willingness to do what's right and fight for truth, no matter how hard it is. And so on this show, I'm committed to truth. Sometimes I'm wrong, and when I am, I'll get on here and say, yo, I was wrong. I messed up. But until otherwise, I'm going to try and fight for the truth, even if it's uncomfortable. It doesn't really matter to me. I'm not a politics guy. I'm a Bitcoin guy. I was raised on this shit. You guys don't understand that. I got into Bitcoin when I was 18 years old, 13 years ago. That's who I fight for. And so the reality of the situation is government's too big. We look stupid. There are serious wounds and cracks at home. BRICS is taking advantage of how weak the United States has become, how indebted the United States has become, and they have started to remonetize neutral reserve assets in our face. And the notion that this administration or last administration, this is a bipartisan issue. This isn't a left, right, red, blue. It's none of that. It's the United States is an empire that overextended itself. It's too indebted. Times have to change. The era is over. New monetary era is beginning today, now. That's just the reality of the situation. And the notion that we got China right where we want them. Oh yeah, the tariffs are going to solve all our problems. Remember when Elon was going to fix everything? Guys, if you haven't figured it out by now, it's bullshit. It's not true. Wake up, buy some Bitcoin.
Mallers underscores the decline of trust in the US dollar. In Russia, it's already gone. In China, it's nearly gone. In India, skepticism is growing. In Europe, trust is waning. As trust erodes, deficits explode. The U.S. national debt becomes unserviceable without debasement. And with every new deficit cycle, the door to neutral assets opens wider. Bitcoin isn't just another option. It's the purest expression of currency debasement, a direct exit from the fiat system.
The United States is going to use stable coins to debase the dollar against Bitcoin and gold. They're going to use stable coins to monetize their debt. You know, the Genius Act, just listen to what they're saying, use your brain. But I would never be that guy. I would never be that guy. But if I was that guy, and if we were that chat, we would say, told you so. But I'm not that guy. I would never be that guy. But if I was that guy, we would say, told you so. Look at the chat. We all told you so. It's not me, chat. It's not me. It's a team game. You guys are part of this show too. Remember, we got no ads, no sponsors. It's just you and me, chat. It's just you and me against the world here. You and me against the world. And so we told you so. And so let's go back and just do a little analysis here and break down what he was saying. First of all, the US is now trying to rewrite the rules of gold and crypto markets. Pause, time out. Pause, 30-second timeout. Tying gold and Bitcoin together. First check. Guys, this is Vladimir Putin's advisor. This is the top of the top, saying the quiet part out loud. The United States is trying to rewrite the rules of gold and Bitcoin. Gold and Bitcoin, okay? We go forward. Remember the size of their debt, 35 trillion. He's actually wrong to the downside. It's 37 trillion. These two sectors, gold and Bitcoin, are essentially alternative to the traditional global currency system. Guys, again, what is going to happen? Russia, China, India, the rest of the world are going to rotate out of U.S. debt. The U.S. Treasury is no longer the world reserve asset. They're going to rotate into neutral assets. Money is our time and energy in an abstracted form. No nation, no bank, no corporation, no anybody should be involved or in charge of our collective time and energy freely traded in the market. Period. Gold, Bitcoin are the neutral counterparts, okay? And they admit this in broad daylight. We go on. Urgently address declining trust in the dollar. We talked about it earlier on in this show. Trust in the dollar is either down or gone. Depends on who you're talking about. In Russia, gone. China, pretty much gone. India, it's getting there. It's getting there. Europe, not gone, but it's down. And whoa, boy, we'll get there in a second. He mentions the 1930s and the 1970s. Guys, 1930s, what happened? U.S. confiscating gold. 1970s, what happened? Severing the redemption of your dollar for gold. Okay? And he's claiming over time, the U.S. national debt will be placed into stablecoins, and they will devalue that debt. They will devalue that debt into what? Against what? They will devalue that debt against Bitcoin, you guys. Against Bitcoin. Quiet part out loud. So what are the BRICS nations doing? They are strategically enforcing peace on the world through their monopolization of rare earths, their monopolization of just being the factory for the world. And they are taking the net proceeds, which is they're taking advantage of the U.S. deficits. The United States deficits is everyone else's profit. You understand? So they're taking the profit, or in other words, they are punishing the U.S. deficits by rolling it into neutral reserve assets, gold and Bitcoin. They are directly monetizing neutral reserve assets, which is punishing U.S. Treasuries market and forcefully moving the world away from the post-71 dollar. Does that make sense? Please say it does. Get yourself some Bitcoin. It's the best expression of currency debasement. It's the best expression of the future of the world we all want to be a part of. It's the best expression of the U.S. monetizing its debt. It's the exit door, guys. It's the exit door. The building is on fire. But here's the thing. The door is only so big, right? Building's on fire, but we all can't exit the door at the same time. What do I mean by that? My buddies who don't listen to me on this stuff, they're going to exit the door, but they might have to exit the door with Bitcoin at $500,000 per coin. Right? The door isn't big enough for all of us at the same Bitcoin price. Get out while you can. Find the exit door. Find the life raft. It's only at 111,000 now. Get out. Bitcoin price of 112,440 US dollars. Bitcoin's market cap is back above 2.2 trillion. We're sitting at 2.24 trillion. Our all-time high remains $124,400. We are now less than 10% away from that all-time high we established on August 13th, 2025. Where are my block height fans at? Will the real block height fans, will the real Bitcoiners please stand up? Slim Shady. Time stamping this at Bitcoin block height 913,807. Ladies and gentlemen, we got a banger today, an absolute barn rocker.
Mallers uses a vivid metaphor. The building is on fire and Bitcoin is the exit door. But here's the catch. The door isn't big enough for everyone to exit at the same time. If you wait until Bitcoin is $500,000, you can still get out, but it will be much more expensive. Today, at just over $111,000, Bitcoin is still early in Mallers' view. The market cap is $2.24 trillion, less than 10% below its all-time high set just weeks ago. But in a world where deficits explode, central banks print, and global trust erodes, Mallers argues the trajectory is obvious, much higher.